When the economy is struggling, it's natural to wonder how you can make money by investing. Should you invest during a recession? Sometimes the best offense is a good defense. As inflation and increasing interest rates wreak havoc on the economy, this is certainly the case in the stock market these days. In today's video, we show you what ETFs should you buy right now in case of a recession. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video from us. Without further ado, let's dive in. As the Fed prepares to raise rates even higher, the NASDAQ Composite Index, which is made up of high-growth stocks, is down over 22% year-to-date. Market volatility has increased as a result of these macroeconomic conditions, forcing investors to take more defensive positions. Investing in defensive exchange-traded funds has been one of the most popular strategies, ETFs. According to Morningstar data, net inflows into defensive ETFs have risen to around $50 billion this year, up more than $8 billion from net inflows into defensive ETFs in 2021. Inflows into defensive ETFs are expected to surpass the record $75 billion inflows into the sector in 2020. Consumer staples, utilities, healthcare, and real estate are among the sectors in which these defensive ETFs have invested. The Procter & Gamble Company, Berkshire Hathaway Incorporated, and Costco Wholesale Corporation are among the top stocks in these sectors. During recessions, these sectors typically perform well because consumers prioritize basic necessities such as food, hospital bills, electricity, and rent over discretionary purchases. 10. Invesco Defensive Equity ETF. The Invesco Defensive Equity ETF is an exchange-traded fund that tracks the S&P 500 index. At least 80% of the fund's net assets are invested in a subset of the parent index listed companies. With a yield of 1.31%, the fund has a net asset value of more than $284 million. Danaher Corporation, a Washington-based conglomerate with interests in professional, medical, industrial, and commercial products and services, is a major holding of the Invesco Defensive Equity ETF. In the fourth quarter of 2021, 87 hedge funds in Insider Monkey's database held stakes in Danaher Corporation worth $7.3 billion, up from 74 in the previous quarter, worth $6.9 billion. Danaher Corporation, like the Procter & Gamble Company, Berkshire Hathaway Incorporated, and Costco Wholesale Corporation, is one of the stocks that elite investors are eyeing as recession fears mount. 9. Vanguard Dividend Appreciation Index Fund ETF shares. It is an exchange-traded fund that tracks the investment returns of an index consisting of common stocks of companies with a history of increasing dividends over time. Johnson & Johnson, a corporation that manufactures and sells a variety of health-related products globally, is one of the top holdings of Vanguard Dividend Appreciation Index Fund ETF shares. In the fourth quarter of 2021, 83 hedge funds in Insider Monkey's database had stakes in Johnson & Johnson worth $7.3 billion, compared to 88 in the previous quarter worth $6.8 billion. 8. JP Morgan US Value Factor ETF. The JP Morgan US Value Factor ETF is an exchange-traded fund that invests at least 90% of its net assets in an index that tracks the performance of companies based on specific value metrics. Attractive valuations, book yield, and dividend yield are among these metrics. United Health Group Incorporated, a diversified healthcare company, is one of the largest holdings of the JP Morgan US Value Factor ETF. In the fourth quarter of 2021, 96 hedge funds in Insider Monkey's database held stakes in United Health Group Incorporated worth $13.6 billion, compared to 95 in the previous quarter worth $11.7 billion. 7. iShares Core S&P US Value ETF. The iShares Core S&P US Value ETF is an exchange-traded fund that invests at least 80% of its assets in securities from the S&P 900 Value Index. The index is made up of large and mid-cap companies with strong value characteristics. ExxonMobil Corporation, an integrated oil and gas company, is a major holding in the iShares Core S&P US Value ETF. Insider Monkey's database showed 71 hedge funds with $5.3 billion in ExxonMobil Corporation stakes at the end of the fourth quarter of 2021, compared to 64 hedge funds with $4.6 billion in the previous quarter. 6. Invesco S&P 500 Low Volatility ETF. The Invesco S&P 500 Low Volatility ETF tracks the investment returns of the S&P 500 index. The fund invests only in the index's 100 least volatile companies over the previous 12 months as determined by the index provider. Verizon Communications Incorporated, NYSE VZ, a communications and technology company, is one of the top holdings of the Invesco S&P 500 Low Volatility ETF. In the fourth quarter of 2021, 63 hedge funds in Insider Monkey's database held stakes in Verizon Communications Incorporated worth $10.8 billion, compared to 57 in the previous quarter worth $10.3 billion. Along with the Procter & Gamble Company, Berkshire Hathaway Incorporated, and Costco Wholesale Corporation, Verizon Communications Incorporated is a stock that hedge funds are buying as inflation continues to rise. 5. Vanguard Value Index Fund. The Vanguard Value Index Fund mimics the performance of the CRSP US Large Cap Value Index. The index is made up of value stocks from large companies that trade on US exchanges. It has a net asset value of more than $145 billion and a yield of 2.32%. Berkshire Hathaway Incorporated, a conglomerate with interests in insurance, freight rail transportation, and utilities, is one of Vanguard Value Index Fund's largest holdings. In the fourth quarter of 2021, 108 hedge funds in Insider Monkey's database held stakes in Berkshire Hathaway Incorporated worth $19.3 billion, compared to 106 in the previous quarter worth $19.4 billion. 4. iShares MSCI USA Quality Factor ETF. The iShares MSCI USA Quality Factor ETF is an exchange-traded fund that invests in the MSCI USA index. At least 90% of the fund's assets are invested in underlying index component securities. Costco Wholesale Corporation, a company that owns and operates membership warehouses, is a major holding of the iShares MSCI USA Quality Factor ETF. Costco Wholesale Corporation was held by 57 hedge funds in Insider Monkey's database at the end of the fourth quarter of 2021, up from 55 hedge funds worth $4.3 billion in the previous quarter. 3. SPDR S&P Midcap 400 ETF Trust. SPDR S&P Midcap 400 ETF Trust invests at least 80% of its net assets in securities that generally correspond to the price and yield performance of the S&P Midcap 400 index. SolarEdge Technologies Incorporated, a company that sells semiconductor equipment to the solar industry, is a major holding in the SPDR S&P Midcap 400 ETF Trust. Impax Asset Management, a London-based investment firm, is a major shareholder in SolarEdge Technologies Incorporated, with 754,007 shares worth more than $210 million, according to Insider Monkey. 2. Vanguard Consumer Staples Fund. Vanguard Consumer Staples Fund is an exchange-traded fund that invests in securities that are part of the MSCI US Investable Market Index or Consumer Staples 25/50. The consumer staples sector in the United States is represented by large, mid-cap, and small-cap companies in this index. Vanguard Consumer Staples Fund has a significant stake in the Procter & Gamble Company, which sells consumer packaged goods. Cedar Rock Capital, a London-based investment firm, is a leading shareholder in the Procter & Gamble Company with 6 million shares worth more than $985 million, according to Insider Monkey. 1. Invesco S&P 500 Pure Value ETF. The Invesco S&P 500 Pure Value ETF tracks the performance of the S&P 500 index and invests at least 90% of its net assets in securities that exhibit strong value characteristics in the underlying index. MetLife Incorporated, a financial services firm with core interest in insurance, is a large shareholder of Invesco S&P 500 Pure Value ETF. Insider Monkey's database showed 36 hedge funds with $1 billion in stakes in MetLife Incorporated at the end of the fourth quarter of 2021, compared to 39 hedge funds with $1.1 billion at the end of the previous quarter. Recessions are inevitable. As a result, investors should build truly diversified portfolios to weather market downturns. The key to building a diversified portfolio is to invest in companies from various industries, including those that are recession resistant. To better withstand a recession, diversify your portfolio by adding some defensive or counter-cyclical stocks in the consumer staples, utilities, bargain retailing, and healthcare industries. This can help your portfolio mitigate some of the negative effects of a recession. With this, we have come to an end. The content in this video is for educational purposes only, and hence should not be considered financial advice. All the financial decisions should be made after doing your wide spectrum research. Do let us know in the comment section below. Also, make sure that you like this video, comment down your thoughts regarding this video, and also do not forget to subscribe to our channel to stay updated about the latest videos. Until then.